everyone. Welcome to the Stock Market Morning Prep video for Wednesday, May 6th. Well, we did get a nice little push to the downside. It's actually refreshing to see that we are getting some volatility now. Now we just want to make sure that we're on the same side of the trend, obviously. Well, what continues to happen is that the bonds continue to get hit pretty hard. And in front of you is the TBT. I've showed this before. This is the inverse short. So you want to short bonds, you'd buy this TBT. But you can see now we're approaching the 200-day moving average. So does this have a lot of room to run? Absolutely, absolutely. We have plenty of room to run here. The next area where I'd be looking for is the next pullback and that higher low to this intermediate low here. So this is something I'd be looking for to actually start looking to buy the TBT again to be short bonds. Now, there's some ramifications with bonds as well. But remember, when bonds usually go down, money comes into equities. But let's see if that's going to be the case this time. So it's interesting here, some really good developments that we've been having in equities. And if we can be ahead of the curve, there's a lot of money to be made in the markets right now. Let's take a look at XLF. And as you recall, banks were doing quite well the last couple of days, and then they actually sold off. Remember, when we do have some fear coming into the markets, and if there's market sell-off, market's going to sell off. Everything's going to sell off. So it really wouldn't matter. But banks held up pretty good the last 2 days. It came back into this big consolidation channel that we've been having here. So if we can get bonds lower and money can actually rotate into the financials and even tech, then I think we'd have a really decent rally here. The problem is that the transports continue to weaken. And I'm going to show that to you in the charts. Here's that ascending triangle and the spiders. And as you can see here, we're still within this ascending triangle. Weekly charts still look okay. There's nothing wrong with that. But remember, we want to just be sure that if we are getting a pullback, the pullback is on low volume and confined in our patterns and our bullish patterns here. So if we start to lose this 208 and the spiders, then I think we're going to have a deeper downside correction down to this lower trend line support, and then of course that 200-day moving average. Okay, here's the IWMs. IWMs not looking pretty, as you can see here. We have now broken down from this bear flag pattern that I showed you, and now we're actually at the lower end of this support area here where we see these volume zones. Now, the next step is going to be that 200-day moving average. So when you have a leader starting to break down, that's not a good sign. This is a secondary leader, but when you see this, the transports starting to break down, that's also not a good sign as well. And this is the canary in the coal mine. If we start to lose this 50-week moving average, again, we are still on this long-term uptrend line, so everything should be holding. Everything is holding pretty steady. Everything's fine. But if we start to lose this, and we do not recover from this trend line support, then I think we're going to have a bigger downside correction. And again, here's the daily chart here. You can see really, really weak, terrible trading the way this has been. This is really something that I'm very concerned about. If we start to really break down here, guys, now we've closed below, and we cannot recoup this gain, then I think we're going to have big problems here. So let's just see what happens. Let's take it one step at a time. But again, we need to get back above that 200-day moving average. Diamond, same thing. We're still within this trend line, this ascending trend line, but we don't want to be losing that 50-day moving average. If not, we're going to see that lower trend line support here, and then of course the 200-day moving average. Lastly, again, is the Qs, which is technology. Technology held up pretty well, but again, guys, I just don't like the way our two leaders are acting right now. Again, as well, banks, they tried to rally, they did not rally. So I'm just a little concerned about what I'm seeing right now in the price action in the interim. Let's look to short rallies when we have down days. And again, we are up today in the pre-market. Let's see if this pre-market strength holds, and if it does hold, right? If it does hold, then we might have something. We might have something a little bit better here. That we might get another test to the upside. But I will be watching the markets closely. I'm taking a neutral stance today, and we'll see which way the market opens. Then we'll go from there. Have a great day, everybody. We'll speak to you tomorrow. Take care.